Let's shift focus to the historic debut on the bourses today. Sigachi Industries made a spectacular entry. The stock was listed at 267% premium over its issue price of 163 rupees.
Pharma input, Nutra and food ingredient manufacturer Sigachi Industries jumped more than threefold soon after its debut today, making its investors super rich. So why did Sigachi enjoy such a bumper listing? Hyderabad-based Sigachi Industries was incorporated as a private limited company in 1989, with the business to manufacture chlorinated paraffin and hydrochloric acid in its manufacturing unit at Hyderabad. Sigachi Industries Limited is engaged in manufacturing microcrystalline cellulose, which is widely used as an excipient for finished dosages in the pharmaceutical industry and is the largest manufacturer of the product globally. Its 125 crore rupees public issue has been an overwhelming response from investors as it was subscribed about 102 times. The quota for qualified institutional buyers was subscribed 86.5 times, whereas the quota for retail buyers was subscribed 80.5 times. HNI investors' portion was subscribed 172.43 times. The purpose of the issue? To fund capital expenditure for expansion of production capacity for MCC at Dahej and Jagadia in Gujarat and manufacturing of cross-carmelose sodium at its Kurnool plant. So, after the dream debut at Dalal Street, analysts believe that investors should book 50% profit and keep the rest 50% in their portfolio. Bureau Report, Business Today Television.
The other listing today was that of Policy Bazaar's parent, PB Fintech. Against the issue price of 980 rupees, the stock was listed at 1,150 rupees and closed at 1,202. The company had raised 5,625 crore rupees through its IPO, and the issue was subscribed 16.58 times. In an exclusive conversation with me, Chairman and CEO of PB Fintech, Yashish Dahiya, details the plans going forward. Now that you're a listed company, is there going to be more pressure to live up to the dream?
So, we feel responsible. We do not feel pressure. If we felt pressure, it would be destructive for shareholders. Because I think, we have two parts to our business. One is the core activities and one is the experiments. The experiments are what build the future. Focus on core activities and, a huge amount of focus on both the growth side and the efficiency side of the core activities is essential, and that's what we are kind of valued for, right? As a company, we've always done a fine balance of experiments, and if you look at our history, we've been built with about $150 million of burn, and that's two brands, Policy Bazaar and Paisa Bazaar, each built by about $70 million of burn. Today, if you look at the valuations, I think it's a good return for investors. So we have not, I wouldn't say we are overly frugal, because sometimes being overly frugal is value destroying.
Sure.
At the same time, we are not wasteful. And I think that is how we will stay. Nothing changes. We are very determined to build a business which is very strong into the future. Now, if that implies short term, the metrics shift a bit, I hope we as a management, and I am certainly determined not to be, deterred by those. And I think if I get deterred and if our management team gets deterred, we focus too much on are we profitable this year, are we profitable this quarter, are we profitable next quarter, etc. It'll be value destroying, not value accretive. And I think that's the message that shareholders should take away. This is a business which is built for the long term. Don't focus on quarter. Look at the core,
right,
core and how that's evolving.